Yo, this is a losing trade example. This is more of like a journal video than it is an actual video. I was looking at these cells based off of this macro, the PM macro from 145 to 215. I saw that price closed above this 15-minute fair value gap, the bearish, and above this 5-minute bearish fair value gap. So I was looking for sells, right? I bought here. I actually don't, wait, I mean, yeah, I was looking for buys, not sells. Sorry, this closed above, so I was looking for buys. So my last take profit would be up here. Um, if this was the actual bias, but I'm gonna get to that in a little bit. So I entered here off of this liquidity sweep because price already closed above and I just wanted this to be the retracement kind of like into the fair value gap because this is like a seek and destroy type of thing right here. This is the first entry up that got these highs and this would be the second entry after it got these enters. These are initial entries out and then kept going up. But then it got stopped out, which whatever. We're just focusing on analysis, trying to learn from the analysis. I'm not worried about the money right now. The money's gonna come after the analysis is all formed. But that's besides the point. So then I saw this. It's on its way. I was like, okay, well, let's strip that. Where's it on its way down to? I'm like, oh, wait, this is the same exact thing, just on a little bit of a bigger scale. So you have this fair value gap, just like this fair value gap. You had the entries that came in right here. The same way you had the entries that came in right here, right? That came in over here. And then over here, right, you had the sweep, and then you actually had to move up. So I was up about 1,000, like 1,100 P&L right here, which is just fine. And to what I was saying, this is all A plus except it didn't go against it went against the bias because I only looked at the 15 and 30 when I was trading, which was correct. And as you can see, it got a move from it. But price overall, I'm bearish. This is Nasdaq, right? This is Nasdaq as well. We're going on the 4 hour. 4 hour, just tap this 4 hour bearish for value gap. And now it's on its way, right? It came down, it broke lots of structure. Not this, even this one, I think, right? So this low to this low, it's a little bit of a difference, right? This one's a little higher, so it didn't completely close, but it broke a lot of structure. And then I had to retrace. It retraced into this 4 hour fair value gap, right? So it could go down here on the 4 hour, or it could go down to a 1 hour target, right? But so like this in-depth video that I'm doing right now of the bias is what I should be doing pre-market. This is pre-market bias. This is what you do before you trade so you understand the direction. But right now I'm just doing it to kind of refresh my memory and to get it inside of yours so you can understand. Just to be exposed to it more. But so price went up to this 4 hour fair value gap, right? This 1 hour is kind of, it doesn't matter. It got into this 4 hour fair value gap. It closed below this 1 hour, inversing it. So now it's coming up and now it's gonna come back down to what? Because it's coming back up to this inversion, right? So it might sweep this high before coming back all the way down. So if you want to, you could look for sells from here to here. That would be good. Or from here to here, you know what I mean? Or from here to here, because this is the next internal liquidity. That's the next gap. We go on the 30-minute. This is also liquidity that tapped into previous gaps, which is good confluence that price could go down after it retraces into something. You know what I mean? It could just be retracing into this 1 hour inversion, or it could be wanting to come all the way up to sweep the sell side and then to come down into these two liquidity. But overall, this is the higher time frame. This is the trade. This is what this is the bias that I should be playing off of. And the bias I was going off of was buys, which was wrong. It was at the wrong time. It wasn't necessarily wrong, but it wasn't in confluence with the rest of the time frames, which is why it's important to understand all the time frames, which is why I tell people like when it's like a common question is what time frame do you look at the most? It's I could say 1 minute because that's what I enter on, but I look at all of them because that's how I get my context of what the market is doing. And the context, I look at the market to get context just based off of the concepts. I mean, yeah. But that's what I wanted to go over. This was a good little journal video, and it's just it's good that I recorded this. I'm glad I got to. But yeah, I'm gonna 5 minute video. I'm gonna post this after I'm done posting the other videos. Peace and stay productive. I ended the video, but I forgot to explain what the other trade could have been. So at the time of this trade that I took, instead of looking for buys, I would look for sells for like down here or at least over here because that's what I like to do. I like to target either untapped fair value gaps or lows or highs. Um, but my point was this sell could have been a this could have been a sell if I was going for if I was going with that what's it called? Why can't I think right now? With that I was going with the correct bias. Um you know what's really funny right now? So price stopped me out over here and now it's coming up and on the 5 minute it looks like price is just flicking me off right now. That's what price is literally flicking me off and then stopping me out and then going up. You can't make this up. This is like you actually can't make this up. This is real charts. This I can't like if I put the emoji I might get demonetized even though I'm not monetized, but still, this is hilarious. Anyways, that's why I can't take it so serious because the people who are running the markets is doing this. Unless I'm, I don't know. But yeah, so if I was going for those sales based off of the 4 hour and the 1 hour, um, I would be looking for sales probably here. So once price tapped this or this order block after this break of structure, but there was this 1 minute liquidity sweep. Um, at this time, price already like closed above the 15 minute. But so this was at what? 142. The hourly candle. Oh yeah, okay. So that would have made sense because it would have been going with this inversion 1 hour fair value gap. So I was just this is what I was explaining. I don't know if I was explaining this in another video or to my friend the other day, but these concepts work, but when you put them together in the wrong like way, then it's possible that they can't work, if that makes sense. Um, obviously. But I've been learning about breaks of structure more from TJR, which I'm open with um everyone who I learned from. Um, so I really like that new entry. I like that it's something I can add, something that works for one, and something that can get me better entries for two. Um, sometimes not. Like if I were to enter off of this close below this low, but price could still fill up into this gap, you know what I mean? Not the gap, but this order block. and the gap too. But stop loss is always at highs and lows. That's what I like to do. I don't understand how to do it any other way right now because it doesn't make sense. Um, but yeah, um, it'd be funny if price comes up here, but yeah, there's not much you could do about that. It's just making sure your bias is correct, understanding both sides of the market. If you're looking for sells, ask yourself, how would I look for buys in this? You know what I mean? Like, don't confuse yourself when you're trading, but also just be aware of both sides of the market. And yeah, that's really all I have. I just wanted to record the opposite side of the trade. That was the winning side. But the sell, this buy was a winning trade too, if I'm being completely honest. I entered off of this sweep, so when price came here, price swept, I entered. No drawdown, barely any. I put my stop loss at the low of this fair value gap. And maybe, I should have put it at this low. And you know what's more crazy? I would still be in this trade right now, I think. Because I took this buy here and my stop loss was here, but when I took this buy here, it increased, it put my stop loss up. But I'm counting this as a winning trade if I just stuck to those two contracts. It's a win in my books. Yeah, regardless though. Um, these concepts do work. It's just putting them together with the bias, with the psychology, with the risk management. Doing those things is what's gonna, you know, help you. But it's actually crazy. I was right about this. You can see where, and my stop loss was here, but when I entered here, it moved my stop loss up. But I was in, so three contracts was the total. I was gonna take one here and here for this trade, this two contract, and then I entered again after this close above this inversion, which was this arrow you see. And then that stop loss was here. And after that got stopped out, it moved the stop loss up. Um, and then so this trade, this take profit was here, so I kind of spreaded it out. But it's nice to know that it actually did work, so I wasn't necessarily wrong at all about my bias, actually. Like, I wasn't wrong at all. So I'm glad I got to record this in the journal, because this was like a really good entry, in my opinion. I'm still confused why it came all the way down here, though. I had to react off of that inversion, I guess. And then there was that search and destroy, seek and destroy, search and destroy, which is this S&D template I have. I'm just gonna put like a Bob emoji. And this S&D, so here's the entry. It's usually like on a fair value gap or a retrace. So it'd be like a retracement to a fair value gap, retracement to an order block, and then it'll go up. And then the search and destroy or seek and destroy would be from when price comes back down to it, which happened here. It went up, happened here, went up, and now it happened here. And just flying up perfectly. Like, look at that. It's gonna hit all three take profits. If I was in this trade, obviously. But that loss right there, this would have passed my account. That's crazy. But that's besides the point. That's like emotions and stuff. But um, technical analysis wise, this works. It's working in front of you. I explained exactly the thought process of my trade before any of this. It was like all over here. And then I came back later to finish to say I forgot to explain the opposite side, because you could have got many different trades here. You could have got this trade, this buy that I did. I didn't. I got stopped out, but I could have exited right there. And this was also a sell to down here. And then this sell was still going because I could have took one contract out, left one in, and then boom. just let it go. But I'm proud of this. But I got it all on video, and I'm not gonna get attached to it because there's gonna be a lot of other opportunities. So I'm glad I got this on video. Um, and I think what I did say was that price is gonna sweep these highs before going lower, because I still am bearish. So I'm gonna keep that in mind when I'm trading. Um, I'm not gonna use ES, S&P. I'm just gonna keep the futures chart to enter my trades, and then the regular Nasdaq to get clean candles because this is just like annoying sometimes. But yeah, as you can see, price just swept this, and it would be a perfect time to look for sells. You know what? For the sake of this video, I'm not taking any trades because I can't because I did blow my account on on these. Uh, I don't think I'm able to. Yeah, no, I'm not. But that's besides the point. Um, we could target these both, right? Or actually, we'll target. Like I said, I like to target Fib Rally Gap, so we'll target this 5 minute Fib Rally Gap. Price did break a lot of. It did inverse this gap. It didn't inverse this gap. It inversed two really small gaps. So technically, you could have entered. I really don't think I would have because these are small gaps for not even a 1-to-1. So I would wait for it to retrace to here. And if I wanted to be safer, I would wait for it to respect it. Because there's like no break of structure yet. So we don't really know if price is really coming down or if it's just retracing. But I do think price is gonna touch this 5 minute fair value gap before it goes up if it does go up. I think it's just retracing. But or if you wanted to just get a 1-to-1, you could have entered here. I'm just gonna put every available entry. There's that one. There's this one. There's this one. And let all of these go as they get hit. Or if you wanted to wait for like a higher time frame turtle swoop, so like after this 5 minute close in a minute, if you think it's gonna come back up and maybe sweep another high, right? You could enter off of that. You could enter off of that high, getting swept. Because when these sellers are getting swept, other sellers can be getting in, if that makes sense. But let's just look at numbers really quick. From entry to here, it's 84 points. Let's just put a limit right here. Stop loss here, right? That's your stop loss. That's your take profit. Sure, it's still a point 0.5, but if you took that, 400 for the day is nice. When you look at these things like percentage wise and things like that, it's actually really, really nice. So something like another based off of what's happening, right? If price decides to follow suit, according to the concepts, price should respect this fair value gap because it respected it. So if it goes up, it's gonna keep going up anyway, which is why we put our stop loss right here. Um, and our take profit is down here at the 5 minute gap. But this is going based off of this 15-minute liquidity sweep. So what I like to do is I like to have A plus would be so like 4 hour and 1 hour is in one section. You have one, you have 30-minute, 15-minute. That's like section two. You have 5 minute, which would be like the mid section or section three. And you have 1 minute, which is the entry section. We need all these sections to be bias in the same bias. The 1 hour and 4 hour, what they do is gonna be a little different from the 30 minute, 15 minute, because they do the same thing kind of, but it's gonna be different from everything else. And the 5 minute is does its own thing, but it's different from everything else. And the 1 minute does its own thing, but it's still different from everything else because that's the entry. You could also enter off of the 15 minute and 5 minute if you wanted to, but if you want more confirmation, then this is good. A plus bias. A plus bias necessities. I don't know how to spell that word. So A plus bias needs equals when sections 1 through 4 is all in confluence. Or simply to say, same direction. Going in the same direction. Going in the same direction. The A plus bias, the necessities of an let's word this better. A plus bias equals um how many pieces are there? There's the time with bias. This is like there's like 3 or 4 pieces to the puzzle. Look at my notes. For confluence, the target, and then the model. So there's 3. So part 1 out of 3, A plus wait, part 1 out of 3 confluences and A plus bias equals when one sections 1 through 4. I'm about to sneeze. All right, where was I at? Yeah, so part 1 out of 3 confluences. 1 out of 3 confluences and A plus bias equals when sections 1 through 4 is going in the same direction. This is extremely important. I'm glad we got to cover this in this video. We will call this Confluence 1. And yeah, we'll go over other ones in other videos. So thank you for watching if you did, and peace. Stay productive.